Peter Eliades with you. It's Monday afternoon, Monday evening, 4:15 p.m. Pacific Time, September 30th. And if you're not excited by some of the things you've been seeing in these updates and how the market is resolving, then you're either not really interested in the movement of the market, or you're not a trader, because this, to me, is really exciting stuff. I hope to transmit some of that excitement to you. This is a chart that we showed around 11:15 Pacific Time, a couple of hours before the market closed, and this is where we were. We were at this bar right about here, right in this area. Okay, so here's what had happened. We came up to an uptrend line that had gone through these two lows. There was a high back here. We came through this. There were two highs hit on the trend line coming down, and those two lines met just as prices came up to them. That's usually a potential warning sign. And so if you were a person that was looking to short the market, that might have been a place where you would have taken on a short. You came up to a downtrend line and up from underneath to a broken uptrend line. And those lines met here, and that's where price was. But, and this is a big but, by then you had generated, or the market had generated, this upside projection, 3,250 to 3,750. That projection had been generated, and so you would have been, by the cycles, well advised against taking a short position there, because this remained outstanding. And when we looked at it around here, you needed to come down all the way down to the 2960 level over the next hour or so to invalidate that upside projection. Now you're in a better position, because in order to invalidate that upside, all you've got to do now is come down into this area, and that upside projection would theoretically be invalidated. So, but there's one more thing I need to show you. What happened right after we put the update on, and that is to look at the next shorter term offset lines to see what kind of a signal we got there. We'll take a look at that quickly here. That's this one right down here on the bottom left. Watch this. Don't you love this? This is around where we did the update, right around here. The market actually started going sideways and started to pull back. So you might have thought, wow, that confluence of the two trend lines could have been important. We started to get a pullback. Where did that pullback stop? Take a look at this. Here's the projection zone right here. 29.74.99, so make it rounded off to 29.75 to 29.76.33. The low on that pullback was 29.75 and a quarter, one tick above the lower part of this projection window. So even while you're waiting and thinking that the upside projection is going to come and you get a pullback, the projections nail the exact pullback in terms of what it came back to. After that pullback, of course, which would have been part of this line right here, the market turned around and rallied very nicely right near the highs of the day, broke above the downtrend line, which you might have been worried about in here and thinking, well, the market's going down. The projection said, hold on, because we do have higher projections. So we broke above that. We don't know still if this projection up here will be reached, but we do know that now we're in a much better position, because we only have to pull back below these lines to get it invalidated. Okay, I'm going to try not to leave any loose strings from one update to the next. And I feel as if I did leave a loose string from last Thursday's update, because last Thursday I showed you this chart, and the S&P cash had closed right here. And so it was right on both these offset lines. And I said that any down close on Friday would give a downside closing projection to at least where this red line is. Well, we had a down close on Friday, and today at least, we didn't go down to that red line. We could still do it. But what we should have done at that time, and what you should do when you're using this projection software to analyze, is have at least 2 or 3 indexes that you're looking at for confirmation. So in that light, let's take a look at what both the Dow Jones Industrial Average and the New York Composite Index showed with the same offset. Okay, this is where the Dow was on Thursday. Dow last Thursday was right here, right at, we hadn't gone below either line, really close to going below the first offset, but did not get below the first and had not gotten below the second. On Friday, the Dow came right down to the lower offset line. And today, it rallied just enough to stay above the lower offset line and not generate any downside projection. That's the Dow. So on Friday, if you had seen this, you'd say, well, I don't know, that's really close. I wouldn't give credence to that S&P projection yet. You like to see at least two of the three indexes that we follow closely confirming each other, and we did not see that on Friday. Okay, now here's the New York Composite Index, and that looks different from all the other two, both of the other two, or the other two. Anyway, this was the close on Friday right here, comfortably above both of the lines, and on Friday we came below the first line, but not the second one. This one, the Dow was very close to being on the second one on Friday, and today we saw this. So now tomorrow, you need to get a really good up move in terms of the New York Composite up to like 13,079 to remain above these lines, and it may not do that. If it doesn't, and they all have a down day tomorrow, then you're going to have a confirmation of a downside projection. But until or unless that happens, the other two indexes, the Dow and the New York Composite, are saying we don't agree that a downside projection has been given as yet. Okay, we're going to show you one other chart with a 2.5 week offsets in terms of market days 24.2, which is the blue line, and 27.6, which is the red line, and how the S&P cash now reacted in this situation. It was interesting today because today, although Friday was indeed below both the offset lines, today the median, the midpoint of the high and low bar for the S&P got back above the second line, the red line, implying that perhaps it was going to invalidate this downside projection that had been confirmed on Friday. So this again is something to watch. Will we have a sharp enough rally to keep it above both of those lines tomorrow? It's hard to say, but the indications are that that could well happen. And remember, we have significantly higher projections that are still lurking above us. Let's take a look at them quickly. Okay, this is the S&P cash again, and these are 24.2 to 27.6, the equivalent of 5-week offsets for nominal 10-week upside projections. We've shown you this chart several times over the last week or more, but we want to show it to you again with a different reason, or for a different reason today. Take a look at these upside projections. 3,095, 35 on the lower end, and 3156.07 on the upper end of the projection. Write down this number. The upper side of this nominal 10-week projection is 3156.07, because we're going to show you a chart that we have not showed you much in the last 4, 5, 6 weeks, and it's going to become very interesting with this in mind. Okay, this is a 20-week offset, 96.8 to 110.6 market days, that gives you nominal 40-week projections. These projections were given way back in March, April of this year, and they have remained in effect basically, almost got invalidated down here for 2 or 3 days with a little move below the red offset, but remaining in effect all the while. And so I want you to take a look at the projection range for the nominal 40-week projection. 3158.63 on the low side to 3331.11 on the upper side. Match this lower side projection for the nominal 40-week to the upper side projection of the nominal 10-week, and they're within 2 points of each other. That's important. So what could happen is we could get up to the 3156 to 3158 level, meet all outstanding upside projections, nominal 10-week, nominal 40-week. The nominal 20-week, which is in between them, has not given anything higher than this. So I wanted to show you these two. That could occur. We find that exciting because if we get up to the 3156 to 3158 level, both of these projections, the nominal 20-week the nominal 10-week and the nominal 40-week projections will be satisfied, we could be at that time looking at a very major market top. So that's where we stand. We're not interested now in the longer term. We're always interested in it, but what we want to do with these projections is show you how we get to those places up and down in the meantime, the shorter to intermediate term projections. Today, we showed you that in spades, and we showed you that in today's update, how those projections worked out just great. You would have gotten today's intraday update if you had subscribed. Bottom right of your screen, click the little red banner. Once you've clicked that, then click on the bell. And every time you see a new projection, or every time you see a notification, go online. There may be a new projection. We're usually saying something that's important for the very short term. So what else? I'd like you to do something else. Those of you, all of you that are watching, give some feedback in terms of what you like to see in these projections. Do you want more technical analysis? Do you want no technical analysis at all? You're obviously going to get the cycle projections, but I want to know what kind of mix you're interested in. So if you'll do us a favor, just go down the bottom of the screen on YouTube where it says comments, press the button, and write a short comment as to what you would prefer to see in terms of these updates, and we'll try to keep the majority of you happy. Thanks a lot for watching. We'll talk to you Tuesday after the market close.